Hello and welcome to Web3 Unpacked, where each week we explore the people, the projects, and the visionaries building the trusted web. This week we welcome Chris Murphy of Klink Finance, an interesting project that I am definitely interested in learning more about. Welcome, Chris. We'd love to learn more.
Thanks for having me on, Rich. Excited to speak today.
Awesome. And as we were speaking about before we jumped on, you are calling from Berlin, Germany, correct?
That's right. It's the first sunny day of the year, actually. So what are we on, the 9th of May? But yeah, sunny Berlin as of today.
That's good. You got to take those days when you can get them.
That's it.
For sure. And, your partner, Philip, he's in Berlin as well, but you have offices in Ireland, I hear, right?
So we're fully remote. German likes to brag he's the only German in a Berlin-based team, but I'm east of Berlin and he's west of Berlin. So he's on the posh side of Berlin, and I'm on the edgy side, if you want to put it that way.
Yeah, the Brooklyn side, right? As I would call it.
Of course, yeah.
So, Chris, one of the questions that I like to ask earlier rather than later in the podcast, I'm starting to ask more people about this, is why blockchain? Why crypto? Why is it important to you personally?
Yeah, certainly. So I guess like everyone who joins the space, it's the excitement, it's the speculation and the opportunity that draws people in. But standing as a crypto founder now, the excitement on my side of things comes from the capability of the technology, right? So we've gone through peaks and troughs, 2 market cycles, but ultimately, as you see more and more so now, it's not a question of if it's relevant within the markets, but the capability it has to actually change the markets. So banking systems, capabilities of people to transfer wealth in a safe, meaningful way, smart contracts to run real estate, even private blockchain opportunities is something that we're going to see in the future. So it's absolutely no question to me to be involved in this space over the past few years, just through the capabilities that the technology will be bringing over the next 10 to 15 years.
Well, I got involved in 2013 for the same reasons you did, as far as excitement, movement. There was a ton of chatter within the developer community, meaning there's something new out here for us to explore from a development standpoint. But there was also this interest in, investing in something that's completely, back then it was speculative and crazy. And forget about having a conversation with someone about it. It was quite difficult. And it still is a little difficult at times. But ultimately, you hit it. It is about freedom and flexibility and trying things, whether it is government or DAOs or finance, trying something different. Right. And I think it's time for that. So, thank you for sharing that. Okay, Chris, can you tell us a little bit more about Klink, the product itself and the gamification?
Sure. So myself and my co-founder, Philip, we were validating at the very end of 2021, basically bringing gamification into personal finance. So what we had observed basically was there was a whole lot of places to hold your crypto assets, but certainly more in a speculative manner, mostly in exchanges, places where you can leverage up, places that welcome you to transact between tokens and trade, where no real good places to actually save your funds and create a little bit of excitement in terms of holding them over time. So where we actually landed was bringing price-linked savings, which is a very old savings schemes within the traditional banking space, into the world of crypto assets. So what our platform is, we describe ourselves to the consumers as a crypto wallet. We're a very good, safe place to store your assets. We're insured by over $30 million in the case of breach through Fireblocks technology. But we have a huge layer of gamification in terms of earning yield on top of your funds on a day-to-day basis. So basically what we operate is a mechanism of a sweepstakes for how you hold your crypto. So for every $25 you hold in each crypto token, whether it be USDC, Ethereum, Solana, whatever it may so be, you're given a ticket. That ticket then participates in a sweepstakes draw, whereby you can win yield as opposed to earning it on a fixed rate of interest. So our prizes range from a couple of cents or a couple of cents worth of that token on a daily basis, all the way up to $500,000 simply for holding up to $25 in that specific token. So what we're actually doing as a business is we aggregate the liquidity together into a single pool. That single pool earns an institutional amount of interest. That's either through staking or through tokenized treasury bonds if you're into stable coins. And what we will actually do across that community of yield that's earned is we distribute it back to the user population. So trade-off, still a very good place to earn variable interest on top of your funds, but still a chance to earn big without actually taking any speculation or risk over time. So that's the namespace we're in. We're a savings type solution in crypto, but a pretty good, exciting place to earn on top of your crypto funds at the same time.
Yeah, and from what I've been reading and kind of discovering on my own is that the price-based savings, which I think is really interesting, when we look at what's happening, especially in the U.S., and we might touch on that a little later, where do you put your money? Banks are, going crazy. Where do you put your money that could potentially earn you a little bit of return? One, you put it in crypto or gold or whatever you want to do, bonds or whatever you're into. But for me, the natural, it's Bitcoin or Ethereum or something like that. This is really interesting, and it really bucks some of the past financial institutions, maybe like a BlockFi, other financial institution or quasi financial institutions we won't mention right now, where you're getting, I've seen upwards of 19.5%, right? If it's too good to be true, it is.
The writing's on the wall. Yeah.
The writing's on the wall. How do you get your money out? You have durations in which you have to kind of stay in for 6 months to a year. Is there a lockout? Is there a lock-in period? Or can people on-road and off-road with Klink easily?
Sure. I think, just on your point of where you park your money, crypto assets now, I feel, are just their own asset class, right? There was peaks and troughs. I know before we jumped on the podcast, we spoke about the legislation changes that are happening in the US and a lot of confusion. Are they commodities? Are they securities? Irregardless of that, they're an asset class, right? So whether you choose to put your money in this kind of market, choosing crypto is certainly a decision that you must make, right? Diversification is key of everything. So my advice to everyone out there who maybe isn't actually within crypto yet is that you must put some proportion of your money into crypto assets. So the next piece, you've hit on a few good points there. When we were validating various different business models, right, we had the Celsiuses of this world and the BlockFis of this world, and we've spoke to people within those businesses as well, right, in terms of understanding what went right, what went wrong. And ultimately, with these types of businesses, they're competing against interest rates. And this comes back to the fixed interest rate piece I mentioned. So if your competitor's offering 16%, you must go up to 18%, 19%. That's how you bring in liquidity in terms of your services. And in a bull market, all good. There's always more opportunity. There's more people doing market neutral strategies, etc. Right? There's certainly a good appetite for lending back towards institutions. But as they always say, when the tide goes out, you see who's not wearing any pants, right? And that's obviously what happened with a lot of the guys out there. So in terms of how we're different, what we do is we look for opportunities in terms of where there's fairness of yield, right? So we don't shoot for 18 to 20%. Our target on stables is around 4 to 6%, which we then distribute back to the user populations back at random. So to give you a bit of a concept in this, right, what we do across the different tokens that users hold in the platform, I'll split it into two. I'll first talk about the stable coins, so USDC, DAI, USDT. If a user holds them, it's completely liquid. What we are doing at this moment in time, in terms of our treasury, we make a pool for all the assets in Fireblocks custody. So Fireblocks is our custodian solution. It's a very highly insured MPC secured technology. But what we would do then with the liquidity is then at this point in time, we work with two partners where we purchase tokenized treasury bonds. So we're earning 4 to 5% off US treasuries at this point in time. So the question then is, how does this differentiate from me purchasing treasuries, right? And I like to explain pricing savings pretty simply in 3 simple steps. So It's like a savings account. You can deposit or withdraw whenever you wish. But the biggest difference is instead of earning 3 or 4% on top of a fixed interest rate, you can have the upside to earn the whole liquidity pool of that prize pool, as opposed to just earning 3 or 4%. So if we aggregate the funds together and it earns an institutional amount of interest on 4% of all user funds, basically you have the opportunity to earn all that interest simply just for holding the funds. So we have a randomized algorithm to distribute the yield back to users who hold assets on our platform. So you'll still earn a variable amount of interest. It's still a good, safe place to park your funds, but you can earn on the upside to earn the whole prize pool of that week simply by participating in the program itself. So that's what we do with the stables. We're only on stables at this point in time, so we're in beta. You can purchase, buy, sell, swap, USDC, DAI, USDT. We will be moving into prize-linked staking in the coming months, so it's not there in our development cycle yet, but our team are working towards it. So whereby we would do a very similar approach. Say for instance we use Ethereum, it's staked on a validator. The validator earns a certain amount of interest, but then our platform would distribute the yield of all of the staked ETH to the user populations back at random. So it's completely gamified returns, but with still a pretty high chance of variable interest over time.
Yeah, interesting. You actually touched on something that I wanted to ask you, which is, do you utilize staking with Ether? And that's pretty smart if you can do that. They're only going up, and it's really, really stable. And you actually, the gamification comes within. It's important for our audience actually to understand is once you put your money in, you don't have. There's no arbitrage models. There's no strange burning, right? You don't have to do anything with stable coins or anything else. Once you put your money in, you're in. The gamification comes in almost like tickets you get, right? And a lottery system.
Sure.
And the longer you're in, the more tickets you get. And actually, you guys do have an introductory, I think it's 20 tickets or 20 chances to win based on entering, it's kind of a nice onboarding feature.
Yeah. So in terms of that prize model, what we wanted to do in the model was prove transparency of the way in which we do the reward distribution. So yeah, basically the way in which we run it for stables at this point in time is for every $25 you hold worth of each token, whether it be USDC, DAI, USDT, you're given a sweepstakes ticket. So basically a no-loss lottery. The ticket has 7 numbers. Our platform will then select numbers throughout the week. And again, like a no-loss lottery, like a Powerball, the more numbers you'll match, the more you will earn in yield over time. So it's a completely scalable model. The more you hold, the more tickets you have, the more chance you have to win through probability. But our prizes range from 1 cent for a 1 number match through stables. We're in the process of creating an on-chain insurance whereby our top prize will be $500,000. So simply for holding funds as little as $25, you have the upside to win $500,000 every week. Maybe by the time this podcast is coming out, you might come onto our platform and notice that we've moved to daily draws as well. So what we're actually moving towards is every 24 hours, the draw runs. So it's daily yield, daily payouts, daily interest. But obviously the chance to win on the upside of $500,000 every day simply for just holding funds in the app.
Yeah, I think this week I registered with you guys, and I'm going to actually start to drip some funds in. And it for our listeners, there is no minimum, correct?
We're simply a platform where you can hold funds. You will start participating in the draws once you hold assets over $25. So if you want to hold $10, it's completely fine, right? It's still fully insured, licensed platform to hold crypto in, but the fund starts after $25.
That's awesome. So basically, there's really no ceiling, right? So that's great, and anyone can get involved. And I love the gamification of it. The more money you put in, the longer you keep it there, the more your odds go up. It's pretty simple.
Yeah. We have a few pretty interesting feature requests by users. We have about 2,500 users on the platform now. A wealth of information comes from the first batch, right? But some pretty cool suggestions such as snap streaks. So if you've ever used Snapchat before, I did at one stage, I don't anymore. But you can basically earn rewards for opening the app daily. So it's almost like a streak. So what we want to actually do is incorporate that your probability will increase. You'll earn more tickets if you check in daily. So there's a huge amount of wealth of opportunity to earn simply just for engaging with the application itself. We also offer 20 free tickets to users as they onboard onto the application as well. So they're on the house.
Yeah, I like that. I like some of those new feature recommendations. It's an engagement driver, keeps people attached to your brand, but also gives them another way to kind of bump their savings up. It's pretty cool. And you can actually get it. Klink can get it so that the audience or the whole community kind of helps to support the brand itself and actually celebrate it. So you're creating advocates or advocacy through the whole program, which is really cool. Now the one thing that was really interesting, we had Omar Emsel on from Fireblocks. Really interesting guy, really interesting product. And I think there's some details. We're not going to go too crazy with talking about them, of course, but they're insured, right? They're insured $30 million custodial insurance through their platform. That's really interesting and important for people to know that the technology behind Klink is pretty solid. And they're really reputable in the space at this point. Not financial advice at all, but can you tell us a little bit more about that insurance program? And the other point that I would like people to know about Fireblocks and subsequently Klink is they have a very interesting custodial key setup, right? So your keys are distributed. And there's no one person. There's not a CEO at a company going, "Hey, let's go and invest in these 10 startups," or "Let's go buy land in the Cayman Islands." Stuff like that. That is super important.
Well, I think that's what a lot of guys were doing previously, right? So the Bahamas, XYZ. we won't name names, but we were tendering at around May last year. We raised our initial funding and we spoke to the market. A lot of referrals came through Fireblocks, but we still spoke to peers. I won't mention the peers that we named. There's a multitude of reasons why we chose Fireblocks. The insurance is one. Trust is a huge piece in everything now, right? And we felt that the custodial insurance is something that's important. It's a strength within our, as you mentioned, in our own technology, that we can vouch for such security. But just in terms of their reputable nature in the market, they seem to be very much market leaders. Have been contacted by quite a lot of their peers in the last few months, big peers that are doing separate types of technology in crypto that are trying to move into their namespace. But I think twofold, when we were looking in May or June of last year, we were looking at custodians that were managing the assets of the businesses as well, right? So like what Fireblocks actually describes itself as, and the back and forth I have with them, is they're a technology, they're a software, they're not an exchange. Some businesses built on top of custodian exchanges, basically, right? Where of course the custody of the assets are held, but they were being tampered with over time. So completely impartial software technology to hold custody assets of user funds, but highly secure through MPC key technology. So probably the simplest way to present that is that there's a key, but it's split into three, right? So basically there's three keys to open one lock. Two keys are needed at a minimum, but they have a transaction policy as well. So within the actual software, you can set limitations, filters, etc. That if a certain transaction happens, a lot of audit, if anything odd is noticed across something, is that there's an immediate notification, and then all of the three key holders have to sign to ensure the confirmation of the transaction. Something very interesting I remember going through the demos with them was if they see a suspicious transaction, I believe they have an internal team that will call the third signature, so the CEO, and they'll actually host a video call with the person who holds the key, just to ensure that there's no, for want of a better description, a gun to their head, right, or anything going on in the
Yeah.
background. So they've really thought about everything in terms of security, and yeah, it's been a great partnership so far.
Yeah, and for our listeners, that's been a big sticking point for a lot of people who want to explore DeFi, the world of DeFi, and these new types of applications that are coming out. So I'm really happy to hear that. I think it's a win-win for both of you guys. It's awesome. And knowing a little bit about Fireblocks, they basically are, I would say, crypto or token agnostic, right? So for you guys, how do I onboard? Am I doing Bitcoin, crypto, any other alts? What do you accept?
Sure. So at this point, so just in terms of the timeline of our business, right? So we're a pre-seed company. We raised our starting funding in the second half of last year, 2022. At this point, we're at a product market fit phase with beta users. You're able to access our application on iOS and Android from our website, klinkfinance.com. But we are doing a test and repeat model on this savings type gamification through stablecoins only. So at this point, we accept USDC, DAI, USDT. You can purchase crypto through our platform. You can also pretty easily send us crypto through a wallet address. You have your own wallet address through the Klink platform, where you can send funds to on Polygon, Binance Smart Chain, Ethereum. They're the networks that we support at the moment. And again, forgive me, sometimes I do podcasts. When do we plan to air this? Because things move so quick.
Within the next week, maybe by Friday,
Okay,
possibly.
right, okay. So yeah, so basically we're planning on rolling by the end of June. As we'll start with Ethereum. That will be our first proof of stake token on the platform. After that, we're just going to keep releasing token after token. So what we want to do is basically offer the gamification to the top 20 tokens, obviously specific to native staking as well. So Avalanche, Matic, Polkadot, a few of the other top 10, 15 tokens that have native staking, they'll be next on our roadmap to offer. So they're forthcoming.
Yeah, it's good to know that that you can't expect something like
Maybe
this
one
to
interesting
have
point
everything.
as well. So what we've also observed, so we've spoke to a lot of people within the sector. So obviously protocols, token issuers themselves, uh, basically platforms that are looking for more utility to their community of staking. So they've all two fairly big providers. They have expressed their own interest to run pricing staking pools through our own services as well. So it's actually more of a collaboration as well. If you're a token issuer, that basically you can drive more utility, more gamification to your staking through our services, through collaboration. So we're pretty excited with that. We're hoping by the end of this year that we'll have a few dedicated commercial agreements with token issuers where they're actually driving their own prize pools through our services. So that's something that we're quite excited about as well.
Oh, yeah, that's a whole new dimension. That's really
Sure.
cool. Awesome. So, a lot of our listeners and, myself and you and everyone else creating for this world, we're entrepreneurs, right? The last year has been, man, a roller coaster ride, right? How do you and, maybe your partner Philip and others within your organization deal with car crashes pretty much every other second?
You
How
get
do you keep
used
your
to
spirits up?
it. You get used to it. I would say this year's been pretty good actually to us, right? So
Yeah.
2023, it's been bad for the banking sector, right? So it's like everyone's running around in circles at the moment, right? It's like don't trust crypto, don't trust banks, right? So it was crypto's downfall in definitely the second half of 2022, but the traditional banks, I feel, are the bad guys of this year, right? So obviously a lot of them dropping like flies. And the question then comes back in, and certainly outside of crypto natives, those crypto curious Web 2.5 consumers, right? They're really thinking again that golden question: where do I put my money now, right? So, especially with the price action of Bitcoin specifically as well, I think there's been a bit more confidence in the market. So all in this year is good, but 2022, man, oh my god, we set out to get our first fundraising round. Terra Luna went down. Then there was almost like, then we had three arrows, then there was kind of few other little blips, and then obviously the cherry on top with FTX on around September time, I believe it
Yeah.
was, right? So all in, I feel for businesses like ourselves, right? So when we first started, we were targeting Web2 fintech type venture capital funds, etc. Certainly targeting Web2 type consumers, right? But we tranched our way back in to kind of, to understand that our type of services, especially how we've developed as a business now, is that in times like these, the Web3 community are the only people that will accept you, right? So we have a great stable of investors, but all in the Web3 space. So crypto native funds. And it's telling that although the space expands and retracts over time, there's still a great community and collaboration, that there are peaks and troughs within the space. So very tough year, but still a very strong year for builders in the space, right? And things will come back around. Already seeing more curious type consumers, curious type investors, etc. as well, that are tipping their toes in the water again because they understand what's going to happen next. As we see interest rates go down by the central banks, I'd be pretty confident that we're going to see a bull run again. I'm very confident of that as well. I won't put a time on it, right, but it will come. So it's a matter of hedging your bets at this point in time, as opposed to being too late to the party. So it's been a whirlwind ride for sure. But all in, I would say this year's been better than the last one anyway, for sure.
Yeah, and it's interesting because we, here at ARC or at Web3 Unpacked, we talk to a lot of entrepreneurs and innovators like yourself every single week. And I ask them similar questions like that. And their heads are north, their chins are high, and everyone's marching forward. And it's a really cool thing to see when you finally realize that there is a better way and there needs to be a better way. You start to invest, do your homework and research, and you finally go, oh, I get it. It's about trust.
Yeah.
And removing trust from humans and putting it within cryptography or an algorithm, for better or worse, for whatever that may be. But it does work. It actually works.
Maybe a point on the founders you speak to as well. Some of the best guys I've come across as well. If you ask about the space and how tough it's been, I think a lot of people are very good at focusing on what they can control, right? So this year, even from a venture capital perspective, a lot of advice we've been given is to build. Just build, get product market fit, get a product that people love, right? You could launch the best business in the world, right? The shiniest platform with all the bells and whistles, right? It's still going to be tough to get consumers in this market because trust has been evaporated, right? But that's something that's out of your control in essence, right? So the market's been hit bad, not just within the crypto space, right? The global markets are not doing very well at the moment. I've met many founder friends in Berlin. They work in many different industries, so it's not unique to the sector. But I think instead of looking at the space in its state, right, the best thing you can do is control what's actually around you, right? So that's building better, listening to the consumers that are there, understanding what the product can be as the cycle moves on as well. So that's a real testament tale, I feel, of someone who's in control in terms of building something that's going to move in the next market cycle.
Yeah, and a big part of it is doing what you're doing right now. Founders getting out on camera, on podcast, on stage, showing that there are real humans and real innovation happening behind the scenes. Yeah, and when it comes to the world of government, and you and I touched on this before, but I'd love to unpack this a little bit. The idea of Europe and Asia really like full bore jumping in and adopting, excuse me, this whole wonderful world of Web3 and beyond. And then you've got the U.S., which, for lack of a better term, seems to be, for various reasons, a little bit of a circus. We don't know whether it's an asset class or what is this, right? You're still trying to figure this out.
Yeah.
And we don't have the right people, the right advocates for Web3 and blockchain right now. They're out there. but we don't have them in government. We don't have them lobbying and having intellectual discussions with lawmakers. That's what needs to happen. How do you see, I definitely have my opinions, but where do you see the U.S. fitting into this, world, if you will?
I think the U.S. is testament to its success across history is its innovation, right? So, and I would argue that some of the best technologies in crypto has come from the U.S. markets as well. Just unfortunately, a problem in policy is the biggest issue in the U.S., right? It's a weird one because I feel the policymakers and government that were in the US, where a lot of them were behind the FTX crisis as well, right? And there would have been a huge pressure from the SEC. They would turn around and say, right, you need to figure this out. And what my observation of it is that they're trying to force it at the moment, right? So it's like push policy through, stick it into an asset class, stick it under the law. That's it. But it's not really like that, right? As you understand, there's different kind of technologies within the sector. There should be different warrants towards different tokens, etc. So unfortunately, it seems to be that it's a sped up version, and certainly one that's been met with a lot of friction, right? And I think maybe the biggest friction point is that there's a lot of swapping and changing coming from legislators in the US as well, right? So the goalpost changing. I believe the Coinbase, Brian Armstrong, the coin. Yeah. So like now they're trying to, I guess, be the big brother of the US market specifically. They're getting lobbyists together, lawmakers. I know they put a letter out to the SEC, etc., the 50 questions. But yeah, it's unfortunate to see. So like if you look at Europe now, I would have said 3 years ago, I said absolutely not. The US and innovation, especially within the crypto space, that's where the money is, the big investment, that's where all the innovation is coming out of. And I would also say as well, it's still the biggest market, right? So we don't have our user base, we won't take on US consumers at this point in time. That comes down to the current licensing we have, but obviously seeing in terms of what's happening in the US at the moment is that it's just to stay away, right? But nonetheless, a lot of the advisory I had and mentorship of people that are in the space, second-time founders or founders who are on businesses of a larger scale than us, that a lot of the liquidity and value came from the US customer base, right? So everything's just stuck at the moment, right? Until these policies are being set through and put into place. I know they have the Stablecoin Act that's probably going to get through the Senate at some stage. But yeah, it's if you look at Europe as well, right? So on the point of, I would have completely disagreed with you 3 years ago, but the EU lawmakers did pass the MiCA's legislation quite recently. I don't know if you followed that, but that's called the Management in Crypto Assets Framework legislation. We've been observing that for maybe the last 2 years, but yeah, it's been passed. Virtual asset service providers, such as ourselves, we're licensed in Europe, we'll have to adhere to a rule book. We'll have a certain amount of accounting practices, etc., that we need to abide by, and certainly act by the practices of the European lawmakers for us to serve European consumers. So I would argue some points in it are very hindering, some points that are completely agreeable, right, in terms of the best practices of how platforms should be operating their businesses and the transparency of it. But I would say that the US lawmakers will probably not be a million miles from it either, right? So if it's one thing, I will back the US that you'll figure it out soon enough, right?
Absolutely. There are so many moving parts and pieces to this whole thing from a US perspective, and this is just my opinion, obviously, but we've got issues in government itself, right? We're the youngest republic on the planet. We're still trying to figure this out. It's the great experiment from a government standpoint. Now you've got this other great experiment called blockchain and Web3 and everything else. It's a lot to take on. And there's a lot of shenanigans, a lot of bad actors in all governments, of course, but in the US that are, I would like to say, in the midst of being weeded out, perhaps. I think once that happens, people are realizing that we're being hamstrung by the government and by oddball regulations,
Yeah.
and we're not keeping our eye on the prize. And you brought it up before. I was going to bring up Brian Armstrong. He is right now one of the strongest advocates for what we are doing, and I feel for him,
Yeah.
but I think he's really smart. He's built a really interesting, wonderful, very straight line company in the U.S. in Silicon
I
Valley.
believe they're only one of the public businesses that are in the crypto space for where they're at, right? So like for them to have the transparency of reporting, right, that would have been no easy feat to go public. So yeah, it's if there was to be an advocate for this space now, and they're also launched their own chain, right? So he's in full support of DeFi as well, right? So out of the many people that are downing it at the moment, from my observation in the US, right, it's good to see the advocates are emerging as well.
Yeah, I think he's going to be not only important but pivotal in what comes out next. And a message to U.S. government lawmakers:
Yeah,
listen to the man. He's not a selfish man. I mean, obviously he's in business, and obviously the point of business is to make money and grow your community. But he really does have the industry's heart in mind. He has the best interest in mind.
do you believe that they listen to him though, Richard? Certainly at those chair
I
committees,
think,
right? If there's some of the questions that come from the lawmakers, right, it seems there's such a gap in knowledge, right, in terms of where they're at for their decision making capabilities.
well, I think there's not only a gap, it's a chasm of knowledge. Like they have a very long way to go.
Yeah,
And I'm not saying that in a bad way. It's just we all had to put in our 1,000 hours or hundreds of days to really understand why we're doing this and why we want to take that big step forward. They need to do it too. They need to embrace this technology that is not going away. Even Brian, I was reading, it was a Coinbase Telegraph or something, an article on Coinbase, and they were like, we're thinking about moving out of the U.S. if regulations get too hairy.
Well,
and I'm
multiple
like,
players have moved out of the US actually, right? So I've observed a lot of players that have stepped out, right? And could you imagine you're a founder or an executive of a large business, there's pressure on you to grow, right? To move yourself out of the US market is a big move, right? So I've observed 3 or 4 big players, UK players, right? And that's no easy decision to make, right? So if you think what they know at an executive level to understand what's coming from lawmakers to make them move their business out of the United States, it's really crazy to see.
Yeah, and they should pay attention to this stuff. It's like Cisco Systems and Tesla moving out of California. That's a big deal. Those are a lot of humans, a lot of ingenuity, and infrastructure that they're helping to support, leaving your state, now leaving the country. So I'm glad he put that out as not a threat, but more of a red flag, because at the end of the day, you hit it perfectly, Chris. And it is about the U.S.'s biggest export is innovation, product design, creativity. And I feel like at this point in time, we have the petrol engine in front of us. We have a Tesla coil in front of us. And we're saying, it's almost like we're saying, we don't need it. We don't really need it. And to me, it's like, oh my gosh, like you're throwing away the first petrol car. You're throwing away the light bulb. And it's very short-sighted for the sake of gleaning tax money and creating regulations. They need to learn to let things go for a little bit, obviously not to get out of control. And the Sam Bankman-Frieds of the world, bad actors, need to be eliminated and punished for what they're doing.
Lawmakers were behind FTX as well, right? There's a lot to say there that I think that's
the web.
Yeah. But that's the issue that's happened here as well, right? And that's what's forced lawmakers into more of a reclusive decision-making process, I feel, right? It's kind of like, okay, we've had this nuke of bad actors, right? It's been tied over into government, right? So let's try to squash it, right? So again, I feel everything that I observe personally is that everything is happening at a pace, but of a negative pace, right? But I think ultimately, it's a terrible thing to say, right? If you look at the old lectures of Gary Gensler, etc., what I would say in terms of him being a bad actor, at least he actually understands the underlying technology within it as well, right? So like he's well adapted to cryptography, he understands the blockchain ecosystem, etc. So it just seems odd to me that a person or people of that level of sophistication and understanding of the technology are trying to inhibit it so much, right? So that's, to me, feels that there's some other reasoning where they're trying to reduce the capability of innovation within the space as opposed to welcoming it as well. So it just doesn't seem to add up specifically.
Yeah, and the you can almost picture it in your mind, like a bunch of lawmakers and people in government going, "Oh, well, we got to do something about this," and they go into a room and they deliberate and
Yeah.
they do whatever. And at the end of the day, if you've spent time understanding this new emerging innovation and technology and industry, the foundation of it is consensus, right? That's the idea that people and lawmakers need to understand, that yes, the US and other parliaments and governments are based on influence from the states into the federal level and into, right up to the White House and lawmaking. But the new model is listen to people, understand what they want, understand their needs and their pain points. There's not a lot of that going on. There's not a lot of consensus going on.
Do you feel
it's something that they need to adopt?
Do you feel that there is a consensus of consumers or retail market that want crypto, Rich, across states?
Yeah, I mean, I'm a little biased in the sense that I talk to guys like you all the time who are like, yeah, of course.
We're in a bubble, right?
Yeah, a little bit of a bubble, but I do listen to other folks, right? So, do we want guys like you and I want crypto POS systems at every coffee shop, every retail outlet? Of course, yes. Oh, please. Mm-hmm. That's going to take a little pushing. Mm-hmm. I think people outside of the space are still understanding the concept of value around it, around the Bitcoin and all of the other currencies, if they get that far. Yeah. But I think once they understand and you put it into terms of, hey, if you pay with your Visa or MasterCard, there's 10 companies plus maybe 50 companies with their hands out, shaving off pennies, quarters, dimes, nickels. Yeah. And wouldn't you rather have it more of a direct, faster, seamless, and a clean transaction with less fees? Well, yes, I would. Well, here's how you can do it. I think, the conversation for us and, because it's important for everyone to understand that guys like you, me, and other people, building in this space, yes, we're entrepreneurs and we're building something that we want to build to better the world, but we're also, and it's not even secondary, we're educators, right? We have to keep educating people as we go.
Yeah.
I think, the more use cases, the more success stories that pop out, the more savings that, even through Klink, like I've been in Klink for 6 months and I've made 4% of my money. That is a ton more and more security than an actual bank. Yeah. So I think once these use cases come out, we start to celebrate it, start to talk about it. That's when people are going to go, all right, how do I get a wallet? Yeah. How do I do this? Exactly. That's really when the eyes are going to open up.
I think an observation of that is, it's a technology that we observe and we love, right? Personally, as we're in this bubble, right? But the value add is the exchange of value to users, right? How does it save the money? How does it make the money? And how is it safe for them to use? But I think an interesting point, and why I asked you about your understanding or opinion, I guess, right, of the US consumers, and as it's actually something that they really want. I can only speak for it in the sense that the users we've taken on at this point in time, they're from all jurisdictions. But what we also observed is a huge amount of our starting users are from emerging economies as well, right? So again, a real eye opener, and something I really love about how we've come into this business is that we've directly engaged with consumers across many different markets out of these emerging markets where they're maybe banked but semi-unbanked as well, right? So they don't have access to normal financial services. So in terms of access to cryptocurrency, stores of values, transparency, privacy, in terms of the wealth that they own as well, the value add for them is completely subsequently different to what the US consumer will see as a value add within the technology. And as I mentioned to you at the start of this podcast, what of course draws people in is the speculation, the growth, the capability to earn. But as we build over time, what has really drawn me in is the use case in technology is that it can be so segmented and separate across different consumers in various different use cases, as you've mentioned as well. So it's endless. I would argue that the emerging economies need blockchain, cryptocurrencies, exchange of value in transparent manners more than the US economy or even the Western markets, right? So, of course, the banks are going under, but still the financial capability to store wealth, take out loans, pay it back, XYZ is a lot more capable in the Western markets that we actually would take for granted as well, right? So, it's the emerging markets that I really feel in the next 10 to 15 to 20 years will really see the use cases of the technology as opposed to more of the Western markets. So that's my personal observation.
Yeah, Chris, great points. And there's one analogy I like to use because you brought up, there's developing nations, there's developing economies, you got to look outside of, Germany, France, England, yep, and the US. You got to look outside and say there is a great big world out there, and people do not have infrastructure. They do not have the same governments. They do not have the same banking institutions we do. The analogy I like to use is, remember back in the day, who's going to want a mobile phone in their hands? Like, why do I need this? I've got a landline. Well, turns out in the Middle East and other third world nations and developing nations, they don't have phone cable. They don't have running power the way we do. So the idea of a mobile phone was absolute freedom. It became everything for them. Obviously, other developed nations such as the U.S. and the UE jumped onto it really quickly, and it became an entire industry, and now we can't live without it. I see it very similar to that. So we'll see what happens. There are villages, in Africa, or even other third world nations or, developing nations that the women have the phone because they keep the finances close to themselves because the men might do something, I don't know, might squander it. Who knows? There's different family structures and values and stuff like that. But people are using it as a form of security.
Where you've seen a lot of people plug into the Web3 community, just, solo developers out of emerging economies that build, right? They build a value, they build an exchange between currency, bridge assets, solutions within the space, right? But their capability of payment, their capability to store the wealth that they've earned is completely subsided outside of a shareholder structure, outside of having good credit, having a physical location where you can be brought in. There's many different limitations that these people have, but they can immediately plug into a new way of monies, right? Exchange of value, and contribute and earn within that space without having to be green lighted across many different limitations that we would actually take for granted within the Western markets. So, yeah, my personal
Yeah.
belief is the emerging markets will benefit most from blockchain over the next 20 years.
Yeah, I couldn't agree more. That's where we're going to see explosive growth, a lot of onboarding, and then everything will take off from there. It's like what I tell people. It's like I wish you could be part of some of these conversations I have, communicating to, people in the office or family or friends or whatever. And there is an entire community, entire sub economy happening, where there are developers, maybe Rust or Solidity developers working all over the world. They don't want fiat payments, they want crypto. They are validated, their code's validated, their work is validated. And subsequently, much like Klink, it's gamified. So the better your code reviews go, and the more you have, the more successful you're going to be across maybe 1, 2, 3, or 4 projects that you're contributing to.
Solidity developers as well, right? If you do 1 or 2 projects, it's certainly not cheap as well, right? So some founders who are very well backed, right? And some of their developers have come from all corners of the world, right? They didn't come from a Stanford, right, or a 4-year education that costs a couple $100,000 to get through, right? So again, it just opens up doors in a way that's not been there before.
Yep. I almost see especially with Web3 and obviously the internet, of course, but the world is becoming flatter in a good way. It's becoming more accessible. So it's not going to mean anything to you about Europe or Asia, EMEA, or US. It's just one happy family working together with a set of rules that are adhered to and celebrated. So it's really interesting times. I definitely would love to continue this conversation with you down the road because it is a rabbit hole we can go into with that. But I want to just jump back into Klink just a little bit as we're starting to wrap up a little. Where are you mentioned you're in beta. What does release look like? What's going on? And then, what's the next 6 months look like for you guys?
Sure. So everybody, perhaps the best way to put it is you think you want something, someone wants something until you present it in front of them, right? And you learn 10 to 15 things from that exchange. So that's the space we're in now. I think the early interest for the business model is certainly high. So probably something I didn't touch on, the pricing savings space has been around since I think the first time was around the 1600s it was observed. So usually used as a bond system whereby it was like an IOU where the IOU return on investment was gamified amongst contributors. So the most modern scheme is in the UK. It has over £200 billion in assets under management. It's very popular in jurisdictions such as India, Pakistan, Australia, Canada, Commonwealth countries. So we're very excited to say we have over 19,000 signups, but slowly starting to merge users onto the platform now. So in beta, we've 2,500 users. Significantly huge wealth of information comes your way once you actually start onboarding the users. Of course, we went through peaks and troughs in terms of understanding is the tech working well enough. So yeah, over the past 5 to 6 weeks, we've started onboarding our users. That has also told us a huge amount of the way in which we're going to move forward. So some interesting points. We were typically doing weekly cycles of reward distribution. We're now moving to daily. Reason for that, people saying in the crypto world, attention span generally across the world is getting lower every day, right? But specifically in terms of the prize payouts, we roll them to 24 hours now. We believe that that's very much more of an engager to become daily activated, to engage with the services. Obviously daily chances to win as well. But secondary to that is our focus is like moving into volatile tokens. So running prize payouts on volatile tokens is a complex task. So in terms of the yield that you can earn on it is completely going up and down daily. The amount of users, the TVL, so the amount of assets under management that we hold in a certain token can come in and come out. So for us to actually build the technology to enable fair reward distribution that runs in clockwork every 24 hours, has been quite a complex task, but we're nearly there. So once we release one volatile token, we can continue with the rest, right? So that's something that we're very much looking forward to in this next 6 months, just releasing token after token, creating new prize pool after prize pool, and ultimately just generally getting ourselves to product market fit. So we have enough runway to get us into early next year. We've had some very good investors come on the cap table. And again, just to iterate the previous point, it's just building something that people love, right? So we get great feedback so far, but we already know how we can be a million times better in a million different things. But it's refining those 5 things that we need to get better at, right? That are mostly important. So our next 6 months is finding our way into the market. We want to get ourselves up to 5, 7, 10,000 users. Considerable usage across different token pools. From there, what we'll be actually aiming for is a seed round of investment then. So we'll aim for further capital. That will allow us to expand our licensing, our technology, and also our access into various different markets. So exposure in a direct-to-consumer business is always essential. But for this point, I would say our next 3 to 4 months is very much around getting the perfect product into the market.
Yeah, Chris, thank you for that. And it's important I come from a product background, and it's important to understand that you don't need to go out of the gate full bore. In fact, with DeFi, it's better to kind of dip your toes in and work, build your community, launch a beta, have things break, fix them, but the whole entire time, and again, it comes back to a bit of consensus, is listening. Have your ears open, understand what features and functionality are working, what are necessary, and what are nice to haves, and prioritize from there. So you can go out with exactly what you said, with the 5 elements that are going to make this successful and enjoyable. So I think that's a very thoughtful approach, and dare I say, from a product standpoint, refreshing to hear. So kudos to the Klink team for being smart about it and not shoving it, being the first to market. It's how about being really good, and really working well and subsiding some of the anxiety that people have of DeFi, which is a challenge these days. So that's awesome. Where can we learn more and perhaps get involved?
Sure. So we're usually running daily promotions on our Twitter. So it's Klink Finance Twitter. But yeah, just join us on our website, klinkfinance.com. Soon to be able to access it straight away. We are currently running through a type form on the website where you'll be privately invited in through the beta. So we're just hand selecting people from different jurisdictions, etc. This again is the test and repeat model. So yeah, sign up through the website. You'll be very quickly informed on your next steps through the email communications. And yeah, expect 20 free tickets as you enter into the application. That will give you a taste of just how the mechanics of the application works. But yeah, very excited to have users come onto the platform coming off this podcast.
Awesome, yeah. And any events coming up, any Twitter spaces you guys are hosting, or anything we should be tuning into?
Yeah, so we are planning on hosting an AMA in the next 2 weeks. There'll be more information on that on our Discord. So that's Klink Finance at Discord as well.
Awesome. And we will certainly be letting our fans know and our listeners and viewers know when that happens. We'll definitely be tuning in for sure because we want to learn more. We're very interested in this technology and product. Chris Murphy, thank you so much for joining us. I personally would love to have you back on. I think this is a great conversation and we can go a lot further, actually.
Would love to jump back on again.
Awesome. Thank you.